Hey folks, welcome back to the channel. This is Jason, host of Fighting Words Financial, and let's talk a little bit about common tax mistakes. Now, it might surprise you to know this, but I don't actually do my own taxes. Now, a lot of you guys know that I'm self-employed. I've been that way for the last 5 years, and I'm basically financially independent. I have a diversified array of business interests, and I manage all of those and kind of spend most of my time doing what I want to do and a little bit of my time doing what I have to do. But my tax situation really hasn't been all that complex for the last 20 years or so. It's only in the last 5 or 6 years that it's gotten really complex, but I've been paying a professional to do my taxes for a very, very long time. And mostly that's because I got audited when I was very young. Now, I realize that tax rules when it comes to audits have changed quite a bit, and it's not quite as painful as it used to be. But let me tell you, it was a really, really unpleasant experience. And I want to talk about some common tax mistakes. Now, some of these are going to be more acute this year because of what went on in 2021 with different tax credits and everything that went on with the tax code. But most of this stuff is going to be relatively timeless, and you want to pay attention to it every year when you file your taxes. Whether you work on your taxes yourself or if you hire an accountant or a tax preparer to do that for you, there's a lot that can go wrong. And this year, that's kind of an understatement. And going forward, that's probably an understatement as well. The IRS is already saying that this year's tax season is going to be really, really slow, mostly because they're running behind due to the pandemic and due to staffing issues. That excuse, in my eyes, is getting a little tired, folks, but hey, it's still around. So the IRS is actually urging everyone to file electronically. Well, why would they urge everyone to file electronically? Time and ease, of course, is one answer, but the real answer is errors. That's actually one of the main concerns of the IRS. If you make a mistake this year on your taxes, it will take weeks or perhaps months to correct due to the backlog of issues with the IRS this year. There are quite a few new problems that you're going to have to deal with if you prepare your taxes on your own and you make a mistake. Now, if you're anything other than a straight W-2 employee, meaning that if you own a business or you own multiple businesses, you have investment income or investment properties, I highly urge you to seek out a professional tax preparer this year. It could potentially save you thousands of dollars. So let's jump into the list, folks. Let's talk about some common tax mistakes. Like I said, some of these are more acute this year, but mostly they're generally applicable to any year. So mistake number one is trying to file too early, meaning trying to get there in January or February. That can usually wind up being a problem, especially as you get closer to financial independence and you're no longer just a W-2 employee. It is almost certainly going to be a problem if your path includes business interests or investment accounts, mostly because you're never going to have all of the appropriate tax information that you need in those first 2 months of the year, January and February. If you have multiple investment accounts or multiple businesses where you receive K-1s or some other type of business arrangements, you're going to get corrected tax forms as late March, perhaps even later, and you're going to have to file an extension or you're going to have to refile your taxes. It's actually pretty common. The folks preparing those 1099s and K-1s and other documents make mistakes too. Number two, this is important for 2021. If you have children this year, it's going to be about child tax credits. The IRS is already anticipating there's going to be millions of mistakes, and I'm not joking. They said millions of mistakes when it comes to child tax credits. I hope you did not throw away the IRS letter about the enhanced child tax credit payments because you're going to need it to file for your 2021 return. The IRS mailed families a letter. It's called 6419, and it shows how much they received in advanced child tax credit payments. 50% of the 2021 child tax credit payment that you'd normally receive after filing for your 2021 taxes was actually paid out as an advance last year to many, many Americans in July of 2021 and December of 2021. Taxpayers in general need to know if they received that advanced child tax credit payments, and they need to know the total amount of those payments because it did matter how much you earned during the year. Lots of people are going to forget these payments, or they're not going to understand that they were in advance on child tax credit payments that normally would have been paid after you filed your 2021 taxes. The IRS letter 6419 that families received actually explained all this information, but it's probably going to be misunderstood by millions of folks And when they go to prepare their 2021 taxes and they write down how much they've received in child tax credit, they're probably going to either end up underclaiming what they already received or overclaiming what they think they should. And when they go to file their taxes, there's going to be an error that's detected, and they're going to be forced to refile and correct that error later on in the year. Any refund that's going to be claimed is going to be delayed because the IRS is going to have to manually review that tax return, and that could take months. Mistake number 3 is just simple math errors. Math errors are pretty common, and usually the IRS will just send you a notice that they've detected an error, they'll fix it, and they'll adjust it along with anything else in your return. This happens with extreme frequency, and the overall rate of error with all tax returns is about 28%, but that's really skewed in favor of those folks who file paper returns. In the case of self-prepared paper returns, that error rate is closer to 60%. So hire a professional if your financial life is complicated and file electronically. Either way, avoiding errors can help you get your tax refund faster. Double check, triple check. Just like my grandfather always told me, measure twice, cut once. Mistake number 4, this is probably the biggest it's ever been, and this problem is only going to get worse. It is not declaring your cryptocurrency earnings. More people own and have sold cryptocurrency in 2021 than any year before, and this issue is likely to grow. In fact, a recent Fed study noted that 20% of all Americans have dabbled in crypto now, which I find mind-boggling since our national savings rate is basically zero. How these assets are taxed, though, has changed, and it is going to continue to change as cryptocurrency matures as a technology. For right now, the IRS considers digital currencies as property, not actually as currency, and it is taxed as such. For the most part, crypto becomes taxable once it is either sold or exchanged. And exchange is very important to realize that. Or when you're earning money by holding crypto in an interest-bearing crypto savings account. You'll probably owe taxes on crypto gains if you convert from one type of crypto to another. It is a taxable event. Crypto, most people think it's anonymous. It's not as anonymous as you think, folks. If you have a Coinbase account or trade through Robinhood or many, many other platforms, these platforms actively cooperate with tax reporting agencies, and you really can't hide from the tax man when it comes to crypto earnings. Mistake number 5, gig work. It's becoming more and more popular, and people are failing to pay quarterly estimated taxes, and that may result in penalties and interest on top of whatever taxes you owe. So do you drive Uber or Lyft? Do you deliver food through DoorDash? Do you pick up work through either Fiverr or Upwork? If you do, I find that a lot of folks fail to properly claim income from this gig work. And this problem is also just going to get larger and larger and larger as gig work becomes more common. Gig workers often forget to track all their expenses because they don't understand how taxation works. And as a result, they are not getting all of the deductions they deserve. For example, Uber, Lyft, DoorDash drivers, you should keep track of all your expenses related to your automobile, not just the gas that you're using. This includes oil changes, tires, the gas, anything associated with wear and tear in your vehicle, improvements you made to your vehicle. These could all be deductible expenses and are going to help lower your overall taxable income. Also remember that when you are a W-2 employer, your employer picks up half of what is called your payroll taxes. As a gig worker, you get stuck with something called self-employment taxes, which is essentially an automatic income haircut in the form of a tax, which is the other half of those payroll taxes that your employer normally pays. So it's essentially an additional 7.65% of your income that is now going to be paid in taxes. Congratulations. Mistake number 6 is forgetting to claim unemployment income. Unemployment income is actually taxable at the federal and at the state level, and many people fail to report it. Now, a lot more people have received unemployment income in the last 2 years due to the pandemic and other factors, and it's likely that a lot of people don't realize that this is taxable, and they're going to forget about it, and they're going to run into the problems with their tax returns. So don't forget, folks, your unemployment income is actually taxable. Now, the last one is also going to affect more people who are gig workers or more people who went on unemployment. This is mistake number 7, and I think this one's going to grow larger and larger as well until we decide to do something about our healthcare system, and that is health savings account contributions. With a lot of people forced into gig work or becoming self-employed, a lot more people are buying health insurance from health insurance exchanges, and many of them have gotten on what are called high deductible health plans. Now, the high deductible health plan allows you to make contributions to what's called an HSA or health savings account. These health savings accounts are deductible for everyone who has what is called a high deductible health plan. Up to $3,600 a year is deductible for individuals, and up to $7,200 a year is deductible for families in 2021. Anyway, folks, that is the message that I wanted to leave you with today. 7 common mistakes that are made on taxes. Now, most of these are made every year. 1 or 2 of these are going to be more acute this year. Tax time is right around the corner. I hope you get it done in time. If you don't, make sure you file an extension. I'll see you next time.